Good morning, Houston4Daily.net, and I'm Kemp Harr. This morning my guest is John Wu, the CEO and co-owner of Novalis. John, how you doing?
I'm good. How are you, Kemp?
I'm good. I know I've caught you up in Canada, but you have gotten out some, and you actually came down to Dalton to check out your manufacturing facility there a couple weeks ago, right?
Yeah, it's been 20 months since I had a chance to see what we have built there, and I was quite pleased when I arrived. So it was a short trip, but meaningful.
Yeah, that's good. So let's get background for the listeners real quick. You're one of the top 5 LVT producers. Your father actually got you in this business a long time ago. You and your sister own the business. You've got factories in 3 places. You've got one of the largest factories in China near Shanghai. You've got a factory in Vietnam, and then as we mentioned, you're ramping up in the U.S., right?
Correct.
Mm-hmm. I've been up and down the interstate, and I see your billboard right out there on the interstate that says we're hiring, so I guess that's one of the issues, isn't it?
Absolutely. When we decided to build the plant in the U.S., we never thought labor would be such a big issue. But as everybody have heard, it is one of the toughest challenges since the pandemic started. And people are just not wanting to return to work, not willing to work. I think it's a systemic issue that's going to take a long time to heal. For us, I've never imagined myself to have to put a sign up, put a billboard up, but now I'm one of those who owns a billboard now in the interstate.
Yeah. Well, and let's think about the equation, too, for a second. You know, when you start talking about what the landed cost is or what the cost to the dealer is, I mean, if in a tight labor market you have to pay more money, and I know in a recent article you worked with us on, you alluded to the fact that with container prices where they are out of China now, American product is competitive, but when container prices come down to their normal levels, it's a little different equation, right?
Correct, I think. But many factors plays into this, domestically made cost versus landed cost. Mm-hmm. Out of Asia, coming out of China, there's tariff. Yeah. Right? Coming out of Vietnam, there's no tariff. Right. So that's one factor. Uh-huh. Ocean freight coming out of China is slightly less than coming out of Vietnam, so that plays a factor. Of course, ocean freight is out of whack right now, and where would it ever get back to where it was, pre-craziness? We don't know. Uh-huh. And raw material prices, PVC resins, stabilizers, all those are all a little different depending on, China versus U.S., right? And so all this plays a factor into the total landed cost. Yeah. Let's put it this way. Every day there seems to be a new factor affecting the equations between, Asia versus U.S. Uh-huh. So okay. Import versus domestic. So, yeah.
Let me go into one of those comments you made. You talked about raw material costs. Are raw materials cheaper in China than they are out of Texas?
At this moment, yes. Mm-hmm. But again, I see these things changes. You asked me 6 weeks ago, China raw material was really, really bad. Uh-huh. There was a 2-week period where I guess everybody heard about the shutdown electricity in China, and that affected a huge supply chain. But now it's stabilized. I would say medium-high level. It hasn't returned to what it was. I'm not sure we will ever get back to what it was last year.
And on supply chain, what are your experts telling you about when container costs are going to get down to a reasonable amount?
There's a group say Q2, there's a group say Q3, uh-huh. But I think none of these really would come down to the level that we saw before.
Right.
I think the freight companies have decided that they can make money, they want to continue to make money, and if the supply comes in, if there's continued this high demand for goods, then they will continue to charge high. They will never get back to what it was before.
Uh-huh. So. Okay. And we've heard the spot price is $20,000 per container, but a guy like you who's bringing a lot of freight in, it's lower than that, right?
Yeah, it's a couple thousand lower than that, but it's everybody bidding for the volume, right?
Yeah. Uh-huh. Well, I should have started with this. Tell us how business is doing with Novalis.
2021 has been good. So it's a good, strong year for us. We continue to have growth. As everybody expected, we're a margin challenge like everybody else because of all the added costs that goes with it, whether it's raw material, labor, freight, supply chain issues. This is the year that we all said, let's make sure we can do survive and build a little bit of business for the future, and hopefully things will settle down a little bit more, and next year everybody can make a little bit more margin. So we're in that same boat. I think setting ourselves right for winning next year.
So do you think you're holding market share, taking market share? What's your read on that?
I think we're taking market share.
Okay, yeah. Good.
Yeah, we're taking market share.
So out of the 3 factories you have, how do you decide which product's going to be made where?
Well, where we have invested in U.S. is a SPC factory, so it can make the glue down, can make glue slate.
Yeah.
So that simplifies the equation. And then among the SPC, I think it really depends on customer as well, because some customers value domestic made more than others.
Yeah.
And then we've also discovered domestic made product actually, is very attractive, especially in the commercial world. So I think we are grabbing shares in that regard. If you tell we can deliver, in a short period of time, they tend to want to give you those projects. So I think commercial will be a big part, and customer who truly value a balanced portfolio as well, where they say, okay, I want some from Asia, some from Vietnam, some from China, some from Korea, and some from U.S.
Oh.
Right, the larger customer will want to do that. So I think a balanced portfolio is where everybody think, okay, that's what they need to be a little bit more nimble.
Is that to hedge the costs, or why would they want to source like that?
Hedge the cost,
and
then they also have the benefit of not having to carry too much inventory if they buy domestically, right?
Yeah.
Otherwise, they will have to stock. So there is a capital cost involved in that discussion as well.
Mm-hmm.
But China remains very strong. I mean, it makes a lot of product that we cannot make in our U.S. factory, and others cannot make in their U.S. factory. So I think that's the key. The higher end, more handcrafted products, high design product is still going to be coming out of China for the next little while until new investment comes in.
Yeah, okay. And so we did interview you in our Executive Outlook. Thanks so much for participating. That's in our December issue, which you can see online. And you said that you expected double-digit growth in 22, especially on the residential side in LVT.
Yes, definitely, yeah. I would even say high double-digit in residential parts. Mm-hmm. Commercial, a little bit more high single-digit is what we are expecting right now.
Yeah. So you don't think, I know some companies are investing heavily in their laminate product. You don't think there's going to be some new competition on the laminate side of the business?
Talking about just laminate flooring, then I think that's a product that, competes well with SPC.
Yeah.
With rigid core, resilient product, but we certainly still have some features and benefits when it comes to resilience that we think we can grab shares. And don't worry too much about that part.
All right. Okay. So this Dalton facility, we've talked about the labor issues. It's a new facility. You're ramping it up. When do you think you'll have it fully operational?
It is fully operational. We are shipping products. We're ramping up capacity depending on labor situation. So that's the biggest challenge. You can hire people, and sometimes they're not stable enough.
Yeah.
Right. So you got to train them. Nobody knows how to make SPC in U.S. So everybody who comes in, we're going to have to train them to make new products.
So there's an advantage on being first. I mean, you were one of the first people to make the investment, right?
Yeah, I was one of the first, and I think we're certainly one of the first to actually ship out products consistently. Yeah. So.
Okay, John. Well, it's great to spend time with you. Thanks for spending time with our listeners. Again, been talking to John Wu, the CEO and co-owner of Novalis, and you've been listening to Kemp Harr and FloorDaily.net.